And tonight on the Daily Wrap, the global economy in a panic after stock markets around the world plunge into the red. Will things get better, or should we prepare for a crash? We'll talk to managing partner at Chapwood Capital, Ed Butowsky, about that. And is Donald Trump our economic savior? Plus, there are reports Hillary Clinton might have a second server after all. Is it true? This is the Daily Wrap, live from New York City. And welcome to the show, everybody. I'm Joe Concha, along with my co-host, Rick Unger.
Anything interesting happened today?
Not a thing besides the 21st century version of Black Monday.
Yeah, I think everybody's getting a little overwrought, if you ask me, but we'll talk about that here.
You do write for Forbes, so...
I do, and
know what you speak.
I think panic is a bit of an overstatement.
Interesting. Okay, well, to the man who says to stay calm, to his right, she is a Philly attorney and America's pundit, and apparently has no stock in Apple because she's just smiling right now. Heather Hansen is back. And finally, Forbes.com columnist and an Emmy winner, Bill Tucker, who knows a little about finance as well. Welcome, Bill.
Thanks.
All right, everyone, let's get right to the Daily Download. And today was a crazy day for world stock markets and your 401k. China had an 8% drop in their stock market, which led to the markets around the world, including the New York Stock Exchange, being down 1,000 points at the start of trading today. The market did regain strength, though, but still ended up over 575 points. Some alarmists, like former financial advisor to British Prime Minister Gordon Brown, that's Damien McBride, tweeted today about how to prepare for a possible stock market crash in the near future. Okay, get your pens ready. Number one, get hard cash in a safe place now. Don't assume banks and cash points will be open or bank cards will work. Hello, Greece. Number two, do you have enough bottled water? I know I do. Goods and other essentials at home to live a month indoors. Better get Netflix going as well. If not, get shopping. And number three, agree a rally point with your loved ones in case transport and communication gets cut off. Someone you can all head to. Wow, somewhere I should say. Fascinating. In the past week, the market is down over 7%, while for the year, we're down close to 10%. Is the market having a natural correction or something bigger going on here? We're now joined by the aforementioned Ed Butowsky, managing partner at Chapwood Capital Investment Management. Ed, welcome to the show. How worried should our viewers be right now?
Well, first of all, thanks for having me on, and your viewers should not be worried at all. I mean, what's happening now, and I heard Rick say something about a panic. There is no panic going on.
Now, Rick said there wasn't a panic.
Right, there was not a panic, and there is no panic going on. I agree with you, Rick, which is really rare. But 98% of the volume on the stock exchange are not individuals. They're computer-based selling programs. And I've been in this world, and I'm in this world. I've been doing it for 27 years, and what they do is, after a while, fundamental analysis, where they look at earnings and things like that, are kicked aside, and all they're doing is looking at these chart patterns. And I can tell you day after day exactly where they're going to try to hit resistance and support levels. And the point is that these are all being whipsawed by computers. Individuals are not panicking. They should not panic. However, the world is a mess. The world
Don't
is
panic,
a mess.
but the world is a mess?
The world's always a mess.
Don't panic, the world is a mess. But their stock market right now, stocks are about 20% undervalued right now based on expected earnings. Now, those expected earnings could come back quite a bit, meaning that they could ratchet those numbers lower. But at this very moment, stocks are not expensive. They're very inexpensive right now.
So, Ed, how does this differ from 2008 and the crash that happened there? What are the factors that you're seeing that make this an apples and oranges comparison?
Well, there you had the liquidity markets dry up. Here, there really hasn't been anything except a fear of China, falling and failing, which is a very real thing. But you had the liquidity markets dry up there. That was a very serious event, as we all know, and that was brought on by something very real. There hasn't been anything real here other than China's missing their numbers. Now, the world is slowing, and that's a big problem. But nobody should be going crazy over this.
Hey, Ed, it's Rick. This is a momentous day. You and I will usually fight over what time it is, and we completely agree on this. You have got it so right. What amazes me is, if you went on Twitter first thing this morning when the numbers were down below 1,000, people were, I mean, they were blaming Obama. They were going crazy, this and that, and they didn't seem to want to accept, folks, these are computers. They are programmed to behave in a certain way in light of certain events. And we saw those events unfold over the last 24 hours. Do you think that we've gotten the sell out of the algorithms now, or do you think there's more to go?
I think there's some more, because what ends up happening, and you saw today at the end of the day, mutual fund managers have to raise cash based on their redemptions throughout the day. So you'll probably see a little bit more of it. But I would say maybe one day left, and then you'll start to, you're not going to see a rapid move back up because there is nothing good going on. But you just have these people making a lot of money, these computer trading programs, hedge funds, and others, which, guess what? They can do that, and it's a free world, and they can. There's no reason they can't do that. But as an investor, if you have cash, look to buy some utilities. Look to buy, certain investments that have good dividends.
From your point of view, we're already at a buying opportunity.
Yeah. I started buying a little bit today. I actually bought some stock in my own account, which I rarely buy individual stocks in my own account, and I felt very comfortable doing so. So anyone, everyone and anybody, don't think the world's coming to an end. It's not. At the same time, you have some cash buy. If you don't have cash, just take a deep breath and go, watch the rest of the show and relax.
All right, Ed, this is Bill Tucker. You hit on the point that I wanted to ask you about. For the people that aren't panicked, for the people who are trying to calm down, where are you going?
Right.
Where in this market do you go? I know you can't go to commodities. You go to cash or where?
No, go to utilities. The best safe haven right now are going to be utilities, because commodity prices are what fuel utilities around the country. They're insulated from geopolitical events, and the commodity prices are cheap. So go buy XLU, which is an exchange-traded fund. That's probably the best thing to do. It's a utility exchange-traded fund, and I would be plowing a lot of money into that, probably picking up 5.5% income. And that's where you put your money right now. If
you got a tolerance for risk, do you want to look at maybe some of the short funds still, if you think there's this kind of volatility left in the market?
No, don't do it. It's a sucker's game. Stay away from it.
Okay. Ed Butowsky, the voice of reason, much like Kevin Bacon in Animal House. Stay calm, all is well. Thank you so much for coming on. We appreciate it, from Addison, Texas.
See you, Ed.
All right. He's a busy man today, I'm sure.
I was very pleased to hear what he had to say. I really was.
What were you hearing in terms of media today? Because I heard some panic that didn't seem to be based in much.
You know what? I actually felt I was seeing the opposite. I had all the different channels on, which I do just because I get interested in how they cover it. And, the business channels that I have some confidence in, they weren't panicking.
Well, business channel is different from cable news.
Well, that's true. And they get to excite viewers by doing what this idiot who put those tweets up. I mean, come on, man. It's not. I don't know what he has to gain by scaring the hell out of people like that.
I love the whole thing about you have to have a meeting point with your family, right? Like three blocks down by that oak tree. Let's meet there.
Make sure the broker's there with us.
Right, exactly, because stocks are falling. Yeah. But what he gets attention. I do think that there's a lot of uncertainty. I mean, if you look at what's going on in Greece, if you look at oil prices, I think that we're just going to see some ups and downs in the next couple
What else is new?
Yeah.
Okay, but China losing 8%, and we have so much money, or we owe them so much money. I mean, should we not be somewhat concerned here?
About that? No.
Not really.
No, not because they're a creditor. No.
Okay.
No, they're not. It's not like suddenly they're going to call their loans. It doesn't work that way. The reason there's
what
concern.
If they go into a recession?
There's reason if there's concern because of China as a customer. But what we saw today with Apple is Cook literally sent out an email saying, folks, chill out. Our business in China is just fine.
Right. Yeah.
So, everybody overreacts, but mostly it was the computers reacting. It wasn't the average, everyday, or even intelligent, sophisticated investor reacting. It's the computers reacting.
I don't even disagree with you on that. The computers, though, exacerbate the uncertainty and the nervousness in the market. And people have been very nervous in this market.
Sure.
So when you get a combination of worry about what the Fed is going to do, and you get uncertainty about what's going on in China, and the nervousness about China is because they buy our debt. They finance our lifestyle.
Does this postpone interest rates being raised?
personally, I think it does. Rick and I have a big disagreement over
I
this.
think it does.
We'll get into another segment maybe, but we have a disagreement. I think we should continue to raise rates, but others don't.
Really?
Yeah.
Okay. Boy, I would have liked to have heard that argument now. That would have been oh well.
Too late.
Plenty of time for arguments.
Yes, that's true. When you get to sit in the middle of it, that's the best part. How concerned are you about the markets? Are you going to get a meeting point and, water and all that stuff? Go to newsmaxtv.com/comments. Up next, Donald Trump. Stay tuned.